Hello there, this is FairBinaryOptions.com, and we are looking at the EURGBP pound hourly chart here, as we had the jobs data out of the United Kingdom with the unemployment rate falling sharply. We also had the vote on the quantitative easing or the asset purchasing in the United Kingdom, as well as the interest rate, let's say the vote on changing the interest rate, so it was no change. Well, starting with the lows here, if you remember, we were looking for an impulsive move. Well, it was an impulsive move, but not with a third wave extension where how we were expecting, but it is a first wave extension, and the first wave is extended all the way to the upside here, and this to be most likely our first wave. So this would be wave 1 in the form of a first wave extension that will end up in a rising wedge, and everybody knows that a rising wedge is falling. So this would be the first wave. Then the second wave, but the second wave, attention, is not this move here, because it is impossible for this one to be a flat. In order for this one to be a flat, it would be an elongated flat, but even in such a case it needs to appear in a contracting triangle, which is not the case here. So I would say that this is only A, B, and then the C wave to the downside, and this C wave to the downside here would be the end of the second wave. Then of course the third wave to the upside, 1, 2, 3. Then a fourth wave to the downside in the form of a contracting triangle here. So 1, 2, 3, 4, and this to be a fifth wave, and there you go. Our rising wedge is completed. Now whenever you have a rising wedge, this one travels between the 1 and 3 and 2 to 4 trend line. So if you take a trend line from the first wave until the end of the third wave like this, it is typical for the fifth wave to pierce this trend line. As you can see, this piercing appears at this high. So that condition fulfilled. Then if you take this trend line and put it here to the downside from the 2 to 4, you are seeing that it is broken, retested, and then with the UK data price goes to the downside. So all this move from the left side of the chart here to the upside, this is the first wave, and even here we need to have an impulsive move, and not necessarily an impulsive move, but a move that would be extended more than 161.8 when compared with the next longest wave, where this is the next longest wave, the third wave. So this is definitely bigger than the third wave. And in a first wave extension, the fourth and the fifth wave, they tend towards equality. So they are almost equal here as well. So the rule respected. So five-wave structure, first wave extended. What to do next? Well, we have two situations to consider. First of all, there is a strong tendency for a wedge, or a falling wedge in our case here, to retrace minimum 50%. So minimum 50% from the whole wedge in less than the time taken for the wedge to form. So just taking a 50% and put it here. And this would be our target, as you can see. So I'm talking about 83.59 to come for the EURGBP pound. And remember, this recording is being made on the 18th of December, on the FOMC day, before the FOMC. So on any outcome from the FOMC, tapering or no tapering, bullish for the US dollar or not bullish for the US dollar, the euro dollar should move, let's say, in such a manner that the EURGBP pound from this moment on should head to the downside. So if this is going to be a bullish move for the US dollar, then the euro dollar should fall faster than the GBP pound US dollar, and that would make the EURGBP pound to fall as well. If the FOMC outcome is going to be bearish for the US dollar, then the euro dollar should rise slower than the GBP pound, and that would make EURGBP pound to move to the downside. This is a classical relationship between two majors and the cross. Two majors in this case are the Euro US dollar and Great Britain pound US dollar, and the cross is the Euro Great Britain pound, this one. So as a consequence, nothing more to say, but just go and engage into buying put options, and in order to avoid the volatility for the Fed, even though on big economic events there are potential, let's say with the potential to move markets strongly, to be in crosses is the safest place to be. But anyways, we'll try to buy put options with end of week expiration date. End of week being Friday. So find a nice place to buy put options. I would go with even these current levels, even with this sell-off. I don't mind into going with such an expiration date. An expiration date meaning actually only 2 days from now on. So this is our analysis, and this is fair. binaryoptions.com. Keep in mind, all our recommendations are possible due to the help of our sponsor here, Lion Eye.